European Union officials and business elites are gradually embracing President Trump's crackdown on China's malicious trade practices. One America's Kristian Rouz has more.
An unlikely turnaround in the European Union stance on the US-China trade dispute, as top EU officials are voicing their reluctant support for President Trump's agenda. During the annual Ambrosetti Finance Workshop in northern Italy, European business elites and top Eurozone policymakers admitted the Trump administration's statements about China's unfair trade practices are true.
The main point to be dealt with in Europe today is the global trade war, the global trade relation, global trade tensions, and Europe should join forces to work on this to put its weight onto the balance.
The EU's gradual warming of President Trump's stance on global trade comes after weeks of stiff opposition to US tariffs on industrial metals, which European officials had warned could cause harmful disruptions in international exchange in goods and services. However, after brief turmoil, US-European trade relations appear to be reinforced by the mutual understanding of China's malicious activities, which include dumping, yuan devaluations and subsidizing.
Look at numbers. Look at tariffs import on cars. 2.5% in the US, 10% in Europe, 25% in China. So who's the true manipulator here? So I can actually, for once, agree with some of Trump's position. Why should you have 25% import tariffs on China and 2.5% in the US and 10% in Europe? So I think the number should be equalized in order to have a fair trade.
European officials say the government in Beijing does not allow foreign companies to operate freely in China's domestic markets. Additionally, Chinese authorities maintain restrictions to the movement of capital out of China, crippling the profitability of European enterprises. Meantime, China is seeking an unlimited access to overseas markets for Chinese companies.
It's a number of things. It's the nature of the US economy, low savings, China high savings, all the sort of macroeconomic factors. But there's no doubt that the US has legitimate gripes against China, most on forced technology transfer, IP theft, market access, all sorts of things like that. So there's a legitimate issue there. Whether Mr. Trump is going about it in the right way is another question altogether.
This comes as mainland China pledged to continue escalating its trade tensions with the US after President Trump announced tariffs on $50 billion worth of China trade, while the Trump administration touted potential tariffs on another $100 billion worth of Chinese imports. Top European Central Bank policymaker Benoit Curie said the US and its trade partners, including the Common European Market, could exchange 10% tariffs on each other's trade, producing a negative impact to global growth and GDP of the US and the Eurozone. European officials called for tighter trade cooperation between the US and the Eurozone, whilst addressing China's expansion of unfair trade appropriately.
Those are the kind of things that could really, really hurt China, because steel and aluminium, they get much more from Canada, Mexico, South Korea than they do China. So they've been working around the Chinese question, and whether they actually go full bore at China will determine whether the velocity and the volatility of these trade conversations picks up.
Participants of the Ambrosetti Forum said President Trump's hardline stance on Chinese trade could in fact be a prudent negotiating strategy. Eurozone officials pointed out Beijing is not interested in trade disruptions with the US, as the Chinese economy is heavily reliant on exports, meaning officials in Beijing will be seeking compromise amid President Trump's push for a fairer trade.
We live in a world that is split between better economic fundamentals and the rise of a variety of geopolitical and geostrategic risks at the same time.
Meanwhile, the response from financial markets both in the US and the Eurozone has been generally positive of the Trump administration's economic reforms, encouraging stock investors in Europe despite the elevated market volatility.
Of course, the first and foremost issue that we have at hand is steel overcapacity, and there the EU and the United States share a common interest in addressing this issue. So let's take one step at a time. The two sides are in contact.
The European elites also expressed confidence China's malicious trade practices would be contained through the measures of protectionism and coercion, coupled with negotiations based on common sense and a balanced approach to trade. Kristian, Rouz, One American News.
We can use your help. Call your cable provider and kindly demand that One American News is added to your lineup. Call today.